Very well. Welcome to the FibStalker Tokyo Open Live Room, and thanks for your patience as we were trying to restart the browser here. Hello, everyone. Should be able to hear me now. Give me a yes on, please, on the chat if you can hear me. Let's see, and then we can actually start. Welcome everyone. Good morning, good afternoon, good evening. Should be able to see and hear me now. Give me a yes on your chat if you can hear me. Welcome to Sinatra, admin, Leb Lopez, FX Ambassador, JM, BW, Adinda, Dion, Marco, Brooke Tefera. Welcome, Brooke. I believe is the first time I see this name. Welcome, Luca, the Grace. And let's go and start this session here. Give me a yes if everything is good. Should be able to hear me now. All right, what you're seeing on the screen is the slide. As you know, this is the FibStalker Tokyo Open Live Room. Welcome to everyone. It's a daily show from Monday to Thursday where we feature real trading. And I believe if you are on my newsletter, free newsletter, you should actually also have received an email where we were celebrating yesterday trade. If you do not have that, I encourage you to actually go to my old blog here, FibStalker.com, and on the top, the left side of the page, you will find the form to subscribe to the free newsletter. It's an opt-in. It's a little process there to do. All right, so welcome Carrie as well. This is a daily show with me, the FibStalker, at the very heart of the Asian session, daily from 7 p.m. to 7:45. Daily indeed, it's only Monday to Thursday, so we lose one Monday session. But Mondays can be slow, and it's not really a big deal. Algos, which is what I follow and which represent my main edge in trading, actually start being active in the afternoon, in the US morning. So the European afternoon, they start being very active. Although we can get setups also in the morning. So, as you know, I take risk very seriously. I believe if you learn to manage risk, you are over halfway in your adventure, in your objective of mastering trading. And I also say that trader's job number one is managing risk. Once you have done that, you either come out with a small loss or even break even, cost of plus the cost of doing trading, or you come out with a gain. So trading Forex and its derivatives, futures, options, and CFDs and other instruments with retail of exchange transaction involves substantial risk of loss and is not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the new FibStalker website as well as the risk disclosure that you find on the live videos as well. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. In fact, the information I provide here is for your general information and educational purposes. Giuseppe Basile, FibStalker Consulting Incorporated and FibStalker will not be responsible for any losses incurred in investments made by attendees as a result of any information in this webinar. So, hello everyone. Thanks a lot for joining in. I want to say a personal hello here, and also to let maybe participants who never saw me or do not know me, I want to say hello. Thanks for joining in, and I hope you brought your ideas. We're going to dive right into the charts now. That's the reason why we're here. This is a very practical and hopefully useful sessions we do here. And in these sessions, we actually comment on trades and setups we have seen and taken in the past, as well as we try to uncover new levels that might soon come into play, and you can test those levels for trades. Hello, Marco. Welcome. We're just starting here. Welcome to Roland. Welcome back. So let's start from the SP500 that you don't see on the screen. What you see on the screen is the dollar index. We'll get to that as well. As I mentioned yesterday, we saw new highs. I mentioned yesterday we could see new highs this week or soon enough, and we saw new highs today. The market has retreated below those new highs, but those new highs are now broken, and this is going to change the perception of a lot of people. Now look at how interestingly, especially people who do not follow daily the markets, but even people who follow daily the equity markets, that they might have seen an event here today with market pushing to new highs, and this is going to trigger some actions from some people. Some people will get excited and enter a breakout exactly at the point where they should wait. We got excited when this market has indeed respected a level that we knew well in advance. In fact, we knew it months in advance. All right, and the level, as you remember very well, we mentioned and talked about that level a number of times, 1792 on this continuous contract. This continuous contract is aligned to June 16 expiry. So see the difference. A lot of people, including some professional, but definitely a lot of amateur and people who do not follow the market, get excited at highs. We got excited at lows. That's what we need to, and we want to get excited. All right. So this market can continue higher. Yesterday we mentioned, if you want to know more about this market, I'm not going to repeat myself. You can look at what we mentioned yesterday. Please watch yesterday's session where we provided an explanation of what could happen next and was going to happen next, I believe, with the next target at 22.17, okay, for this market. But before I was looking at the dollar index gave us today a clear participation on the upside. For those who follow me know that we were looking at this 94.35. We've been looking for this level for weeks as this market, the dollar index, and I'm looking at the ICE US futures of the dollar index here. Not a lot of volume today. This is a market that usually gets up to 300,000 of volume exchange in a good day. But what is important, it's not volume. In fact, the volume, it's not even an indicator, I believe, because I saw and see constantly market moving on the upside or the downside on a small volume as well. And what is more important is price action. So market is and still is on top of this important weekly long level. And today it has shown strength. It has shown, and very clearly on the 4-hour time frame here, that this market found participation from weekly time frame. Although we are not out of the woods here, I believe that this market can now actually can now continue higher, and we have a very clear level where we are going to look for how shorts, if we get there, how shorts are going to behave, and that's the 96.20. That's the next measure move where daily shorts would be looking at this market to see what they have to do, whether they have to get involved and then push again this market towards the weekly area where weekly participation has started. That's the 94.47. This level also been tested a number of times here. It's been tested 1, 2, 3, 4, 5. This was the 6th time. It is a very, very important level and area, because if market moves below Let me remove this target for a moment here. The market moves below 92.65. The dollar index will be cooked, in my belief, which means that we could see much lower price. In fact, to get convinced and be convinced of that, is just simply look at the price of this market in the last 20 years plus, and you will see that there is a sequence of higher lower highs and lower lows. And if we lose that level, the halfway here is not gonna hold. And my fear is that we're gonna see 78, 77 again. Okay, that's not still the case. I don't know if that's gonna happen. I don't guess the market. I guess the levels of participation, and then I test those level of participation using probably the technique that they call the FibStalker timing. Now, and that's basically models how algorithms, certain classes of algorithms are active on a smaller time frame and produce the very same sequence that we see on the larger time frame. They exist on high volume market, also on the smaller time frame, and we can leverage those to actually help us understand whether the counter trend move wins or the participation from this larger time frame wins. Every time we have a level like this, there is also a counter trend into that level. For example, the 94.58 was known since 2 years ago. Actually, in fact, it's been tested a number of times here. So not 2 years ago, but I would say almost 1.5 years. Sorry, almost 1 year here. Sorry. So when that level started being tested, every time that level was tested, there was a counter trend move into that level, counter trend move into the level, counter trend move into the level, and so on. Right? Every time there is a counter trend move into the level, in order for that level to show that there is actual participation, the participation that comes within that area that is identified by that level has to be strong enough to win the sequences of measured moves, and the algos are pushing this price in the counter trend. Okay, so that's the simple concept of the FibStalker time in that. So what can we then anticipate in this market? So far, so good. There was participation. So I'm going to look for the 96.16 to be tested, which would mean what on the euro dollar? Well, the euro dollar, it would mean a test of that 111.40, which we mentioned now since a few weeks. And that's what this market is actually doing. We found nice participation at the European Open here, right after that 8:30 EST bar, as we can see here, and the market just moved lower. I believe that this move can continue, and if the dollar index gets into 96.20, this market can get into 111.43. As you know, this show is interactive, so if you have trades and markets you're following, I see here FX Ambassador suggesting the pound versus US dollar, as well as the pound versus the yen. These are markets that FX Ambassador follows very, very closely, and they can offer good opportunities. Although I have to say that I have other markets to which I apply my models that respond much better. But you know, as FX, I have some trades on here. Let's go and review the pound versus US dollar first. Okay, I also see a couple of new names here. And again, if you want to get involved, you should get involved. That's the whole purpose of the show, to get you, involved directly. And as Mauricio Carrillo says, not being treated as just an attendee, but as a partner who actually participate in the discussion and brings value to the discussion as well. So I like to give a unique viewpoint that probably it's not found often around, and that's by modeling these areas where we get participation of algos. But I appreciate and value any comments and contribution, because there are several ways of skinning the cat, so to speak. All right, so yesterday we mentioned the pound, the US dollar, and we noticed that this market, which is in a lateral move here, might be resolving that lateral move, and for the first time in the last basically month and a half, this market has showed a participation on top of 141.36. That participation was confirmed on Monday, today, on Tuesday, Monday and Tuesday. Today, on Wednesday, we had a little correction on the downside, but this is perfectly normal, especially if you had 3 days in a row of this market moving higher. So to me, this doesn't change the current view of this market that we have on the daily time frame here. Is the move down ended? This market is at value on the 4-hour time frame here, and it could react on top of an extension that I'm going to show here. It is already reacting on top of that extension, as you can see here, and in fact that's where it stopped. So if this market continue higher, it is at value here, and this is very possible. It is possible for this market to get into 145.20. Now, notice that 145.20.30 here would also lined up with the first target that we have on the daily. So I like when things actually line up together. So there is a participation on top of this 141.40, which actually is pushing this price into a level at 145.70. At the same time, we have a potential participation on the 4-hour time frame here, which saw a little bit of participation here, and if this holds, then we should not see 143.84 challenged. If that happens, then this market is going to look for further participation at the 50% here. Okay, so that's the plan for this market: continuation higher into 147.30 first, and then 147.70. Or if 143.08 is based on the downside, looking for new participation, new fresh participation on the daily time frame at 142.50. So this is the trading plan for you for this pair here. Okay, I don't see a lot of downside when I look at the 4-hour time frame here. So it is possible this area is going to be respected, and in fact we are seeing some participation in this area. All right, so if you have a trade long, that trade is valid until price stays above 142.15 here. Okay, we can then review the pound versus Japanese yen, and if you have any other pairs, please feel free to write them, and never shy away from commenting and offering my view on this market. If you are trading a specific pair, or want my view or what I see on the market for that pair, I mean, I'll be very happy to answer. Now, last week we mentioned this 157.80. This is still in play. Indeed, price has printed slightly higher highs here, 157.69, 167.68 basically went 2 pips above that level, that weekly level here. Now, for those of you who don't know where this market is, this market is on top of a weekly area of support, which has showed participation in the last week and a half. And it's testing currently a continuation short, and that's the reason why that market stopped at that level. And it's very clear here the way it stopped. I mentioned this hammer bar yesterday. Yesterday we didn't know what would happen next, and I mentioned the market clearly reacted at that level. The market then continued higher, and actually again around that level, slightly higher, it reacted again. Okay, so when we look at this market, I think I've just closed that. Very well done here. All right, and so when we look at that area is clearly very, very important. This market has not shown any capacity so far to break that level, and I'd love to review, get a view here on the 4-hour time frame. This market is divergent here in these areas, so it is not impossible for this market to put a correction until to 156.50 here. That's not impossible. So so far this market has shown has shown to be respecting that 157.68. A confirmation will only come when the sequence here is actually pierced, and there are a couple of levels we have to look at, and one of these levels is certainly the extension that we can see from previous size here. Now this market can still come into 155.60, and still we could actually see still a continuation of the sequence of measure move higher. So the best way is to move down into the smaller time frame and try to get a risk-free trade, try to generate a risk-free trade around this 157.68, because we still don't know whether the weeklies are going to win on the long side or the dailies are going to win on the downside. Okay, but this market has offered a risk-free trade already, yesterday here, and today might be offering a new risk-free trade. This level could be retested for even printing slightly higher highs here and then, but still be within this area of potential short. Okay, so it's indecisive here. It has shown the participation lower yesterday, but today it continued higher into that area. I believe it's setting up a divergence here, and it might continue lower. Okay, so that's my view on this market. Let's review very quickly silver. If you don't have any other suggestion, if you have suggestions, please write them down, and I will review those charts as well. FX Ambassador, let me know if that is sufficient for you. I see there is Ras back. Welcome back, Ras. The silver here has actually just consolidated what we the move we actually saw yesterday here, and didn't advance this market really a lot since the in the last few hours here. Actually the market has just consolidated laterally here with a bearish look on the 4-hour time frame. However, when we review the daily time frame and the strength with which this market is currently moving in extension, I have little doubt that eventually, even if this market has to correct laterally as it did for a few days back during the middle of April here, this market will eventually get into 1750. That's what I the high here was the 1720. 1750 is the second target. The first target, as we celebrated yesterday, is already touched yesterday, 1660 here, and we're looking for a continuation higher, and after that we will need to see whether this market will keep pushing this price area in extension, if algos will step in at the extension levels, or if we need to see larger retrace where we're going to pick up more silver here. Silver has printed for the first time after almost a year here, higher highs and lower and higher lows here. So this move could be the beginning of something more important. We don't know yet. We don't know if we get the collaboration of the dollar index and if the intermarket relation is still valid with the dollar index, and we still don't even have the actual direction of the dollar index. In fact, the dollar index at this stage is responding to weekly long. All right, you're very welcome, FX Ambassador. I hope that that helps. Fortunately, we cannot say more on the pound versus yen at this stage, but we will be able to say something in the coming days. Interestingly enough, pound versus Japanese yen, along with Canadian versus Japanese yen, Euro Japanese yen, Australian dollar Japanese yen, and a number of majors like the Euro dollar, New Zealand dollar, Australian dollar, and pound today have shown a reaction to divergences between price and indicators. Now, as you know, I don't use indicators, but in my own trading, but in this review, I also try to match the FibStalker methods, which identify this level well in advance, with other methodology like breakout methodologies. Particularly, I like to use the continuation style, which is one of the styles I feature in this for you in these sessions, and as well as method based on continuation and divergence. All right, so now not all of the market, the 8 market that I just mentioned, have the same strength in the reaction, or have some of them have divergences on the 4-hour time frame as well as daily, but not all of them, right? So US dollar Japanese yen, very important, has broken that area that has being participated. Interestingly enough, and very, very important to note, that those areas that have been participated have offered risk-free trades. That's always important, because knowing that we can easily generate a risk-free trade at some point, so we get a full risk initially and then we become risk-free, allows us to take advantage of these levels. That's exactly the reason why we can actually trade these levels, because it is often, these levels often offer a risk-free trade when they trade. However, once they are broken and our stop loss is hit, we normally, if we have a risk-free trade, we exit at break-even plus cost of trading. What's happening in this market? This is an obvious reaction of what's happening in the dollar index. This market is still in a sequence of measure move lower. The fact that the dollar index is reacting does not translate immediately, automatically into a move higher in this market, although this market tends to trade against the dollar index and against the euro dollar. So what we can anticipate here, the aggressive extension here has failed now, so we don't have that participation in that area any longer, and there are two more levels that two more levels that we are going to consider, and I'm going to show one level which is the closest that we should consider again as a potential short here. So for those of you who are long, who actually have traded any divergences or any other signals or reaction that you got from this area here, there is the potential now for this market to move into 111.25. See how the outlook changes. Of course, there is always a direction that is the direction of the path of least resistance. That's what I look at, and that path of least resistance, I believe, is still pushing price or letting price slide, to be more precise, into 173, 170. Why I say letting price slide? Because these rallies that we see are certainly not driven by the larger time frame, not driven by the weekly time frame. Why I say that? Because I believe strongly that the weekly participants have shown in more than one occasion that they're going to consider longs when this price gets into 170, right? And if you review some of the analysis and sessions that we actually have looked we have commented in the past, that'll be very, very evident to you. Okay, let me do a quick time check here. It's 7:40. So we started a little bit later today. My apologies for that. Some technical issues sometimes eat a little bit of price of time here and there. So I'll start a summary for this session right now. We actually started from the SP500. SP500, as mentioned in the past days, had a very high probability of seeing new highs. That happened today. Higher highs for the first time since now May last year, since the last 11 months. There's no such a thing as treble tops. They're very, very they're rare. So I believe this market is going to continue higher. And yesterday we discussed it in detail. The next target 22.17. This price is also going to now this price action is going to draw in a lot of people, but they're going to buy, I believe, at the very wrong moment, because this market will eventually correct and might generate opportunities for professionals to take advantage of weekends. Now, if you're asking who's buying this market, whether professionals or people who actually buy funds or small investors, but the majority of this volume is coming from companies buying back their own shares. Okay, probably 70–80% of it, and the companies are sitting on a U.S. companies sitting on a lot of cash, and they can actually support this trend and higher prices for some time. Yesterday, we also spoke about the review of Ron Maisel that has been interviewed by my friend Dale Pickett. So take the opportunity to watch that. as well. We then touched very briefly on the dollar index, which today showed the strong hand here with weekly algos coming in and participating into this price action here, which now could continue higher into 96.20. If that happens, the euro dollar is likely to correct into 111.40 here. All right, so that's my view there. We also mentioned silver that just continued laterally here today. There is a good probability for silver to see that second target. Yesterday we celebrated with Craig Reynolds as well, who actually was kind enough to share his chart and excuse me, excuse me, the details of his trade, 11 reward to risk in that trade, and that's the kind of trade that we can get in this trading room if you take advantage of these areas and you act. And particularly, Greg has mentioned two entries, one at the end of February here, timing and getting a risk-free trades in a few hours. And again, the same happened when this level has been retested, and also thanks to the comments in this trading room, we were able to stay on the right side of this trade, which took 36 days to complete. We then quickly touched on the euro Japanese yen, which obviously is reacting to the positive developments on the dollar index, and in fact it broke the 109.76, so this short is not there any longer, and we are looking at a test of 111 plus, which is this level here at this stage. This is still going to be 111.30, still going to be a short. Don't get it. I wouldn't get excited with longs, only for small and brief trades here, like the ones that you are having here. So if you're long this market, probably it is possible to bring this price into 111.20, 111.30 here. And this action is continuing. And then we reviewed the pound versus US dollar, which is moving laterally, and for the first time after more than 1 month and a half is respecting the 141.40, and has the potential to bring this price into 145.20, 30 first, and then this first daily target 147.80 there. Condition for that is 143.29 has to be respected. And finally, we also covered the pound versus Japanese yen, which still reacting. That's 157.68. This is one of the 8 markets showing a divergence on the 4-hour time frame, so we could see a continuation lower in this market. Market will tell. The most important thing always when we see these levels is to obtain a risk-free trade from this level. We got one yesterday, and we're very close to get another one here if you traded that level. All right, so this is it for today. Well, thank you for being here today. Again, I want to thank FX ambassadors, Sina Adelaide Lopez, Roland Russ, JM, Kerry, BW, Arinda, Dion, Marco, Brooke Teffera, Luca. I don't know if I pronounced that in the right way. Luca, De Grace, and Arinda and Desi for their continued support to allows us to have this show. And if you find it interesting, please tweet about it. And I will see you tomorrow, Thursday, at 7 p.m. EST here on live video at FS Street. Thanks a lot for your for being here, and I hope this is useful. All right, thanks a lot, and see you tomorrow. Bye bye now.